Good morning, friends. It's Wednesday, September 28th. I'm Marv Eisen of Timeless Dollar Trading Academy, and we begin the day looking at the economic calendar, and I want to call your attention to the Fed Chairman Jerome Powell delivers his opening remarks at 10:15 that is going to affect the market. So I would suggest that you probably should hold off trading based on what he says or until after we see what the market does after what he says. Moving over to the morning news, futures are just about flat. Oil is down below $80. That's good. The 10-year Treasury note, of course, is up close to just under 4%, 3.884. But we knew that, and that's been rising for the past few months. And I want to move over to the S&P E-mini chart, but before I do, I want to go over to the daily chart. This is the daily chart of the S&P, not the E-mini, the S&P, and these are one-day candles. Each candle is 1 day. And I want to call your attention to the last two trades, the last two candles rather. And in the last two candles, we see a sort of mysterious candle formation. This is, well, if this was a green candle and this were a red candle, we would call this a bearish engulfing pattern. But then again, that would have had to been from the top of a rise. And it's at the bottom of a falling trend. So I don't really know what to call this, except this is an attempt of the bulls to try to hold the market at current levels and the bears to knock it down 2 days in a row. Now, I want to call your attention to June 22nd. June 22nd, previous to yesterday, June 22nd printed the low of the year down at 36.40, thereabouts, and that was exceeded yesterday. But the market did close yesterday above that level, 36.49, almost 36.50. So the market is really trying to recover or at least hold the line here, and let's see if it does. I want to go now to the 1 minute, or rather the 3 minute chart of the E-mini. This is the E-mini, a 3 minute chart. There are 10 points between each horizontal line to give you a frame of reference. This is yesterday, September 27th, and I want to call your attention to the two methods of trading that I teach and that I suggest. There are only two methods of trading. One is short-term using setups, and the other is long-term using the trend. And I'm not talking about the trend over 10 minutes. I'm talking about the trend longer term. But in terms of day trading, the trend that I pick up on is the Taylor trading method numbers. Now, the Taylor trading method was developed by George Taylor 75 years ago in the 1950s when he studied futures markets, and he devised a system that applies to all futures markets, and all professional traders know these numbers, or at least they develop the numbers each day. You don't know the numbers just by thinking it, you have to do the math. And these numbers are derived from a series of 12 calculations, at least the ones that I developed. And each day I calculate out the Taylor trading numbers, and I put my results on my trading chart for the following day. So the Taylor trading method is a longer-term method to determine where the market is likely to trade the following day. I've done it today, and I'm not going to show it to you because I developed these numbers. It took me a long time to learn this. And if you don't believe it, buy yourself the book, Taylor Trading Technique, or Taylor's Book Method. I think it's available on Amazon. And if you can even understand the book, you're a good man. But these numbers are not easily discerned on how to do the math, what numbers to put together to calculate them. Nevertheless, looking at the short term, I teach 6 trade setups, GST, TMC. If you've seen my previous videos, you know what that means. If not, enroll in my course. It's a relatively inexpensive trading course. I don't give my knowledge away, but at the same time, it's valuable. And I also have a subscription to the Taylor Trading Technique. Now, I want to talk about the longer-term trading using the Taylor Trading Technique. Yesterday, the Taylor Trading Technique rewarded traders for 60 points, 55 to 60 points. The day before, around 50 points as well. So this technique is a long-term trading technique. It's not going to be profitable every day. You could win 60 points one day, 50 points another day, give back 30 or 40 points another day. But averaging out, you will average out and get most of the current trend. And it is a powerful method of trading. I suggest that if you want to try it using paper trading. Take your chart, get the trial subscription. It's free for a week at timelessdollar.com. Use it in a paper trading exercise and see how it does for you. And by the way, in doing this, you really don't have to check the chart every 5 minutes so that you can get your head out of it, because trading can be mind-racking for many people, and nerve-wracking, I should say. And it really is. So if you want to trade the bigger picture without having the mental agita of looking at the chart every few minutes to see if you find a setup, and to many new traders, every candle looks like a setup, right? Which we all know is not the case. But nevertheless, if you want to use a longer term method that has much bigger payoffs and longer time frames, try the Taylor trading technique numbers. So today, stay out of the market until after the Fed chairman makes his announcements at 10:15, and let's see what develops from there. Again, the market is looking to recover. This is a strange formation. You don't see it anywhere going back to, let's see, this is February of this year. We're at the bottom of the year right now, and typically investment firms like to boast to their clients that they've done a good job for them year end. So this is the window dressing part of the year, folks, and doesn't look like they're going to be too successful this year in bringing the prices back up to anywhere near where they were at the beginning of the year. But nevertheless, we all know what's happening. There's a war in Russia. There's gas supplies that are at risk. There's inflation. There's recession. There's interest rates. We all have to just bear with it, press on, and trade intelligently and work the market day after day. This is Marv Eisen for Timeless Dollar. Thanks so much for watching. Trade with patience, and I'll see you in my next video.